We have reached the closure of a major time frame that can release a powerful historical signal. Unfortunately, we won't be able to see its resolve until market open tomorrow. There are still some upper time frames that display weakness, so let's pop open those charts to gain a true edge over price. Welcome back to the channel on this Thunder Thursday. This is ARCa, and let's dive into ticker symbol NVOS. Let's kill them. What is up, you guys, and welcome back to the channel. Let's go ahead and dive in to ticker symbol NVOS, and we are observing here that very famous bullish tri formation, right? So if you are having a little bit of trouble determining what that even is in the first place, right? So let's just go ahead and highlight them real quick so that we can just have everybody in the same page, right? So this formation that you're seeing here, this is a bullish formation named descending channel. Right, the second formation would be these lines here, right? So these regressions mark off a descending broadening wedge, bullish formation as well. Now the third potential would actually be this formation here, right? So shoulder, shoulder, you have a head here and a shoulder and a shoulder. So that is an inverse head and shoulders, right? It does consist of two shoulders. It's okay. It doesn't give it any more validity or doesn't give it any more strength. It's just it just displays that it's an inverse head and shoulders. It's all good. Okay, so those formations each have individual targets to observe, right? So first of all, the target that we can observe here from the broadening wedge, that would be a target of about $1.72, right? To the genesis of the formation is usually how you trade it. Now, the inverse head and shoulders does have a very curious target as well. That target is actually acquired by taking a trend. I'm sorry. You know what? Let's just actually, you know, can I do that from? Yeah, let's do it from the head, right? So let's see if we can find the regression here yet again. I just didn't want to. It's all right. Let me find the neckline here. Oh yeah, that's right. It is it. Okay, yeah. So this is the neckline for the inverse head and shoulders, right? And that is how you determine its top side target from the neckline all the way to the bottom side of the head, and then you apply it to the point of breakout, which would be the center of the right hand shoulder, and that takes us to a very confluent target, just like the top side of this formation here. So two formations already suggesting a top side target that is equal to each other and also equal to the 1.272 Fibonacci ratio at 169, right? So now we can go ahead and mark off an area for resistance, right? There you go. Now, the third target would be acquired by the formation, the descending channel, right? So go ahead and take a trend line from the top side to the bottom side of its formation and apply it to the supposed area of breakout. So let's just say that we were to break out here, I don't know, on Friday, yeah, let's just say that we were to break out tomorrow, right? I'm not sure that it's going to do it, but it's just the potential is there, right? So that would take us to a target of about 165. So now that gives us an overall range. So 165 to the area of 162. I'm sorry, 172 based on psychological targets, with a focus of 169 being the geometric target. Okay, so this is now the range that we can observe here if price action were to continue to the upside in the bullish case. All right, so let me just go ahead and extend quickly here in invite, right? Because this is the first time I can actually do it early in the session. This is actually I'm not saying that this particular call, this is not going to be the last call, but I'm saying that this is going to be the last class that I'll ever teach, right? So I've already, track 3 students already started 4 weeks ago. I've already done track 1 and tracks 2, consisting of around 35 to 38 students each. I've opened up another 30 seats for the week number. I'm sorry, for the track 4 students, and about 15 or 16 seats are left from those 30. Okay, so please go ahead and send me an email here to arcmasterscourse@gmail for the 16-week mentorship program. And this is actually going to be something that I will never teach again. Okay, so as I need to get back into trading, and now that I officially have the direct access terminal, I definitely have to focus. Okay, team. So Just giving it a last call here for any potential master students to get a good start to the new year, to the 2024 year, right? So we're going to be starting, I believe, the second week of January, and yeah, all right, team. So go ahead and send me an email. I'll send you the syllabus and the disclaimer regarding that. Okay, so next, let's go ahead and observe this here, because we still have a little bit of danger in the markets here. This is a bearish engulfing on a buy daily time frame, and I believe tomorrow at market close, we're going to be able to see this 2-day iteration finally close. This candle here, that's going to close, right? So that's going to give us the hint of a continuation to the downside or not. And the way we can do that is simply by closing the candle beneath the area of this opening, of the closing of this candle here at 114, or the wick low of 111. But I really have to check to see if this is in fact closed or not, because if it is closed, we technically just printed a bullish formation, being a tweezer bottom, and this can actually lead price action to an upside, which would be amazing, right? So let's go ahead and now move on to the next chart here. Okay, so this candle here, the one that we got popped up here to 129, please remember that we were already speaking of a potential target right around 131. So we got very close to that target, right? That could have been a target for us to realize already target number one from the breakout of this formation, being the falling wedge. Okay, so price action essentially reacquired the inside of the wedge, and there still could be a support bottom here, anywhere between 115 to the low of today of around 114. Right. So, and please remember that we were actually talking about a potential 113 just yesterday. Right. So we got very close with a 114 bottom. All right. So now please remember that this also has 3 targets to observe, one of which may have already been realized right around the 131 area. Right. But we got 129. The second target would be 139, and the range is to 145. So 139 to 145, and the top side of the range here, being the back of the triangle here, trend line from the top side to the bottom side, would be 162. Range would be 159 to 162 in a bull case. All right. So and this here, I believe that we did get the close. Let me think. I hate that I don't have my timer here. So I think that we got the close today out of this 3-day time frame, and this is the time frame that we're looking for to run the statistics, right? So what we're looking for here is contraction to start from volatility. You can see you can see that the volatility component is already moving beyond and under the moving average. The moving average represented by the white line, and the spectrum trend line would be the volatility component itself. Okay, so so we would need to look for contraction officially beginning, paired with stochastic momentum with an upside pivot, in order for us to meet the criteria for the statistical backtest data that we collected, right? So throughout the entire trading history, anytime that volatility has started a contraction phase from critical volatility or critical expansion, paired with stochastic momentum with an upside pivot, I've taken note of every single time that it's happened throughout the entire trading history on the 3-day time frame, and also calculated the data, right? So these sample sets came up to this data set here, 24 total iterations, of which 18 were guessed correctly to the upside, marking a 75% upside accuracy and an average upside thrust of 175.54 on average. That's the mean over the span of about 26.17 days, right? So just for those of you who are new, I have also calculated the that's right. I've also calculated the standard deviation based off of the mean, and that's a move that would be 190.56%. And beyond this, just in case we reach some higher targets, I also, based on a standard distribution curve, right, the bell curve in statistics, I have also included the upper bound of the first standard deviation, second and third. So now we have negative values for the lower bounds, so they're going to be statistically unusable. Okay, but yes, this is the distribution curve here with the probability set, and yeah, so we have a 366% run on the upper bound of the first standard deviation. So those targets I actually have here in a speculative manner because we still don't know where the signal is going to fire. The price is what I mean, right? So the movement to the upside here based on 175% move to the upside is somewhere around 361. The top side of the 190% standard deviation would lead to around 385. The upper bound of the first standard deviation would lead to a target of around 606. And you know what? Let me just go ahead and include here. It looks like I never included it, but I can include just as speculation. Of course, please remember, I'll include the 566% move to the upside. That would be the upper bound of the second. And that would be 556.66, right? There we go, right there. And that would be a move to $8.49. And then finally, the last move would be the upper bound of the third standard deviation at 747.22% to the upside, marking approximately 1069. Okay, so that is currently what I'm observing here. And it could be a potential, right? Please remember that statistics are not certainties, and we should take them as such. Okay, but yes, I have random math. The probabilities are there. Now we need the criteria to meet. Okay, so please remember that what we're looking for based on, I don't know if we got the closure today, so it may actually be tomorrow morning. And if it's not tomorrow morning, then it'll be Monday first thing, right? So what we need here is absolutely stochastic momentum with an upside pivot and definitely a contraction phase beginning with volatility. And then everything would be kind of set here, right? So immediate short-term time frame displaying a little bit of weakness here regarding the RSI, right? So, and also the bi-hourly time frame is crossing beneath the SMA 14 represented by the pink line of the RSI, which usually suggests a continuation to the downside. But I will say that it's kind of consolidating, right? It's trading very much sideways at this point, even though we have a little bit of downside here in the immediate short term. It's oh man, and it's so uniform on that downside. It just shows that there's a lot of the psychology. When I see things like that, it just shows me that the psychology is completely, I would say, in a pensive state, right? So I don't know if this is something regarding more. I learned today that there was a fundamental release today, right? And we were already kind of speculating on that potential from last night's thread. So now I guess this type of consolidation is, I mean, also look at this 2-day candle. This is a 100% an indecision candle. This is called a spinning top doji, right? So indecision in the markets, a tie per se, right? It would be a tie between the bears and the bulls, not just literally not giving you a favor to either side. Right, so that shows very much in the moving averages of the RSI as well. So complete consolidation, sideways trading. It could be due to some fundamental metric that is timed. Not sure, but we will observe come tomorrow. Okay, team. So I think this is a pretty good place to leave off. Please remember to acquire your seat on the ARC Masters trading course before it's too late. Okay, team. So yeah, I think this is pretty good here. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. Never, never, never. I need you to do your own due diligence and everything will be cool. But with that said, team, I wish you well, a very, very good rest of your night, and I will catch you at the bell mañana. Adios, team.